Hey everybody, it's Mark Yegi. Welcome back here. And a lot of you have been kind of following me on Tesla. Now, I've been in Tesla in a lot of my accounts for the better part of 4.5 years. And so this was a pretty big week where I took most of my position off the table in a lot of my accounts. And so you're probably curious to see how it went. And this is also a video to show you that covered calls work when the stock is going up. And there's so many people out there that have been trained a different way. I'm not saying it's wrong or right. I am, but they've been trained a different way. And they think that if the stock goes up, you lose money because you have to spend money to buy above the strike price. It's a common fallacy, a common misunderstanding. It's the most common question that I get on the channel. And in my group too. And that once you realize that you want the stock to go up, then once you realize that everything works out. But most people think that you want the stock to go down because you don't want to get it exercised or called away or assigned. And that's just not true, and I'm going to show you that. So let me show you I had to go back and put a line in the sand of where we started this trade. And so that was October 23rd, somewhere here at the beginning of this chart. So you can see that's about, I don't know, $245 on the strike price, on the stock price. And so you could see it went up and it came down and then it gapped up and it had another little gap up and it came down, blah, blah, blah. So it went from like 245 and it doubled, okay, to 488. So if this doesn't show you and prove to you, all you doubters out there, that you make money when the stock goes up, even when you have covered calls, I don't really know what will. Now, Tesla's a crazy stock, hard to hang on to, great company, tough stock. But you could see it went from 245 to 488, and then over the ensuing few days from 488, over a month or two, it kind of came back down, and this is about where I exited, right around 333. And so that's just a couple of days ago. So that's the way the chart looks, from 245 to 488 to 333. That's where I had my line in the sand that if it kept going down, I was going to get out of the position. Okay, so here is the spreadsheet, and it takes a while to put this together because brokerage firms just don't have it figured out, the game we play. So we kind of have to do a little work on a spreadsheet. So I've got the spreadsheet divided into two spaces. The long positions, okay? And then the short positions. Now, sometimes what we do is we sell the call, and you can see all those videos where I tell you how much I'm making in the juice, because I'm in this for the juice. And I show you how much we're making for the week or for the 2-week period on the calls, okay? And so what I want to show you is that the long positions are here. So you can see I bought, sold. And as the stock went up, I kept kind of chasing it up with the long position, trying to position myself in a good spot. And you can see I started here with the 215s and I ended with the 325s, okay? So that's my base position. They're called synthetics if you don't know what they are, but the base position are these synthetics, and I had to roll them up to raise cash as the stock was going up. I don't mind that. I call it working capital. The next section of this is called the short positions. And so these are all the short positions where I started here on the 23rd of August, sell to open the Tesla 225s. Those expired worthless, so I made $7,900 because remember, you get the money when you sell and then you have to buy them back right before expiration. So I sold to open the August 30 225s that expired a week later. You could see they're the August 30th. And the price was $265, and that was all money that I kept because it closed underneath the strike price. And so that is the juice that I got, or the money that I got from that, okay? Most of it's juice usually when it closes like this, but sometimes it's in the money amount that I get as well. Then you go to next week, because the next week I just did the same thing again. It expired, and so I sold 20 calls against it, and I got $6,400. And then the week after that, I got $4,700. And then the week after that, I made $17,799. And then a week after that, I made $10,000. You're getting the picture, right? There's 5 trades in a row where the juice was good, and I got to keep that because the stock, rewarded me for collecting the juice. And that's what I'm after here. The time premium, not the whole premium, the time premium. I call it the juice. But next week, the stock shot up, and you can see I sold these 235s, and I had to buy them back for $36,000 because it shot up, right? So the net was $36,000. I got $6,100, and I had to buy them back for $43,000. That's okay because my stock went up, my long position. Anyway, I'm just going to scroll through these very slowly. You're going to see quite a few red ones where it costs money. Those are the money that it goes over the strike price. That's the cost over the strike price. Well, a lot of you freak out when that happens. I don't. I'm like a duck, like swimming frantically underwater, but on top of the water, everything's cool because If the stock is costing me $62,000 to buy it back, I'm making it up on the long side, okay? As long as the stock keeps going up, which it stopped doing and which I got out, okay? And so you can see a lot of green ones and a lot of red ones. There's no question about it. This stock was going up, and when it goes up, it goes against you on the in the money amount, but we're collecting the juice all the way down. Look at this one. Made $103,000 in net on the stock at, when I did those 450s. And so you see it kind of, it goes up some weeks, and some weeks, you net out down. This is a big down one, right? 158,000. But if you look at all of these together, you can see most of them are green. I would say probably 60% just looking at it. And some are red, something like that. All right, are you ready to see how much the position made? Now you can see there's a lot of trades. So there's a little bit of work involved. It's like once a week we did a trade or two. But at the end of the day, did it make money? Now the stock went from 245 to 488 back down to 333 when I got out, right? So let me just unhide these columns because I know you want to see the results. And if I unhide them, you can see on the long position, I made a gain of 317,303, netting all these out. On the short position, I lost money. Okay, lost, I guess. So it cost me $80,000 when the stock kept going up. Well, you can see that I gained it on the long position. I lost it on some of the short positions, but I made up for it because the juice was so good on the way up. And so when you net all that out, here's your number. I made $236,534.96 in 6 months. And that is when the stock went mostly up and came back down, and I had a circuit breaker in my system to say, look, if it hits this price, I'm getting out. It could have gone down another 30 bucks, which I probably thought it was going to do, but it doesn't matter what I think. I'm not Nostradamus. I can't predict the stock. In the way it worked out, it went up another $25 from the time I got out. I couldn't have predicted that. It could have gone either way. So if you're one of those people that's like, oh man, you picked the bottom. Yeah, okay, I did. I traded my plan. I'm proud of the fact that I traded my plan. And I can get back into Tesla anytime I want, whenever I see the right strength on the chart. And I don't see the strength on the chart these days. I see 2 up days after a bottoming under 320. So, moral of the story, you want your stock to go up when you do covered calls. You want your stock to go up. Now, the difference between what we do is we don't usually let our stock get called away or assigned. We like to roll, and that's what you're seeing down here is all of the rolls. There's a lot of trades, I'm not doubting it, right? All of those rolls. These are the closed trades out as of that day, the long positions against the short positions of Tesla. It's about a 6-month trade, and when you make $236,000, even though it was up a lot more, by the way, when you make $236,000, you can't argue with it, right? Because if you had said to me back on August 22nd, hey, you're going to be trading for the next 6 months and you're going to make $250,000, but you will have gone up to, let's call it 400,000, and at the end you will have made $250,000. Would you take that deal? I would take it every single day. So that's how I trade Tesla. It was a tough ride. It's always been a tough ride with Tesla. And I think it will always be a tough ride or an interesting ride with Tesla, but that's the way it worked out. Hope you got the idea of what we're doing. We're going for the juice. Thanks for being with me, and I'll see you on the next video. Take care. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.